Good morning, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. This is London Morning Commentary on the 24th of May covering Mexican peso, Brazilian real and Indian rupee. Now, looking at the Mexican peso on the chart itself, you can see it's absolutely obvious there that the channel has now been broken. We closed just below it, but enough that we can now see the whole thing is actually starting to turn over. The only thing that's holding up is the middle time line from 2017 to April 2018, and that's at 1957 or thereabouts. But 1970 is key. As long as we can stay below that, then there's an opportunity for us to try lower, and the key level on the downside will be the 50% Fibonacci level of this whole recent move, and that's just under 19 even, say something like about 1898.60, something like that. If that comes under threat, then we can now look and see, okay, there's an opportunity now for the key support levels, which are just below that at 1875, to see whether they'll come under threat. It's a very interesting market, and this one being dollar Trump, as we say, the Mexican seems to be in the ascendancy at the moment, so I think you're going to see potentially something going along those lines. Now moving on to the Brazilian real. Not dissimilar pattern in some ways. I haven't drawn an uptrend, but if I did, well, it'd be probably around about 361, because I think it's actually too steep to draw an uptrend on that one. But it looks very much like a spike top. The diamond bottom, which was holding the market and starting the whole move upwards, that's really sort of finished off now. So, and also is the Andrews pitchfork that we've got growing there, which is a lopsided one. Again, we've basically been following the lower time, which is around about 364. But if we're going to get closes below that, we may have an opportunity now, especially that we had that explosive move on the upside up over 380 or there, 376 or thereabouts, that now we have an opportunity to try lower and come back again. And that could be drawn somewhere to around about the 344 level where we have the 50% Fibonacci level. That would be an interesting area to see if it come back down to that, but it's a little bit too early to anticipate that. Let's have a couple of closes under that lower time. Finally, move on to the Indian rupee. Now this looks a messy chart. The reason I've left it sort of so many lines across the top is I wanted to show the viscous layer of resistance that this market was punching through, that every single move was at a cost, and we've come very close to the top end of it. There really isn't anything. There's a gap between say 68.50 up to about 68.90, and then there's the last chart's resistance. We'll have to start projecting levels beyond that. But you can see that the resistance has gradually eked away the bullish incentive, but it's not done that much. We've accumulated new highs last week, this week. So what's going to happen next? If we get closes above 68.50, it will be a fairly swift move to 68.90. And that's your last chance. Then after that, it's all the way up to, I'll have to do projections beyond that to actually come up with something. The only opportunity is if it comes back down again. But there's a lot of support now, because all that layering underneath it is all going to be acting as support. So I think it's going to be a slowed, viscous market. I don't anticipate necessarily that we're going to see an explosion unless we go over 68.50 and go over 68.90. But I don't anticipate an explosion down, just a gradual layering down if we do go down. It's not certain yet. At the moment, the trend is your friend, and it's moving upwards, but there's a lot of stuff in between. Good trading.